Good morning, students. Okay, so today we are going to discuss a few transactions. Okay, and how I'm going to solve those transactions. That is, we have to pass journal entries, okay, from the following transactions. Okay, so this is January 1, 2020. Okay, so I have put the date. Okay, Mohan started business with cash. So here cash is introduced into the business of rupees 80,000. So when cash comes into the business, cash account, that is, which is an asset account, it increases, so it should be debited. And at the same time, the capital of Mohan in the business increases, so increase in capital will be credited. So to Mohan's capital account 80,000, being business started with cash. Now goods has been purchased from Ram on credit. Okay, so from Ram, okay, the business has purchased goods on credit, means payment is not made at that on that particular date, that is January 6. Okay, so purchase account is to be debited. For expenses being increased, it should be debited to Ram account. Ram here stands as a liability for the business because the purchase has been made on credit. Okay, so the amount is 30,000, 30,000. Got it? Now you see sold goods on cash. Okay, so on cash, in cash the goods has been sold of rupees 6,000. Okay, so you just so there is sale of goods, okay, in cash. So cash comes into the business. Okay, so cash account, which is an asset account, it increases, so it should be debited to sales account, which is a revenue. Okay, so revenue gets increased for cash sales. So when revenue increases, it should be credited, being cash sales made. Got it? Okay, then what is the next entry made? On January 15, bought furniture from Yash for cash. Okay, so furniture has been purchased, okay, in the business, okay, from Yash for cash, means cash payment has been made. So since cash payment has been made, so there is an increase in asset. Okay, furniture increases. So furniture, which is an asset account, when there is an increase of furniture, so it should be debited, and at the same time cash goes out from the business, so it should be credited, so to cash account. You just see the entry. So bought furniture for cash from Yash. Okay, furniture account is debited, it is an asset account, to cash account. Cash goes out from the business, so it should be credited, being furniture purchased 8,000. Okay. Okay, now next you see on January 18 and January 20 there is payment of salary and payment of rent. Okay, so here paid salary to manager, since nothing is mentioned, that is, okay, so it is a cash payment made, okay, of 6,500, and here rent is paid and it is clearly mentioned that it is paid in cash. So here salary account debited to cash account because it is an expense account, so it increases, salary increases, so it should be debited, and cash goes out, which is an asset, so it should be credited. Rent, again, it is an expense account, when it increases it should be debited to cash account, which is an asset. Okay, it goes out from the business, so it should be credited. Got it? So here the two entries, paid salary and paid rent, are almost same. Salary account to cash account, rent account to cash account. You see here on January 18, salary account is debited, it is an expense account, to cash account, it is an asset account, it goes out, so it should be credited 6,500, 6,500. Then on January 20, rent account, again it is an expense account, so it should be debited of rupees 1,000, 1,000 to cash account, it should be credited. Okay, so you have understood these entries. Okay, hopefully I can take it that you have understood. Okay, so if you like my video, please subscribe my channel, because I am very new to this channel. Okay, so that I can come up with more videos, okay, latest videos. Thank you.